Hello and welcome to Experience Realty. My name is Tarun. Somewhere in Dubai tonight, a man will sign a check for 80,000 dirhams for rent, a one-bedroom. He'll sign that check again next year and the year after that. Well, he's thinking he's paying for a roof over his head. Well, he isn't. He's buying a home and that too for his landlord. And there are numbers nobody prints on a billboard. In 2025, this city sold 111,000 apartments, off-plan apartments. Property Monitor's full year data shows 6.2% of them only changed hands below 1200 dirhams per square foot, which means 94% of the market cleared the 1200 dirham per square foot threshold. And at that too, the affordable ones, the ones which are under 1,000 dirhams per square foot, there were only 1297 sales, which means only 1.2% of the total transaction. Now, is this a rounding error? The bottom rung, gone. Now, the bottom rung of the ladder, it did not break. Someone literally sawed it off and it climbs higher every quarter. You stand there deciding. Now, there is a word for what that does to people now and today. And the word is financial nihilism. Whole generation that ran the maths of owning a home and then walked away from it. So this term is financial nihilism, yeah? And the part which most people miss is the maths, which is not broken everywhere. There is one corridor in this market that still has a door that opens at 1200 to 1800 dirhams per square foot, and 4 addresses, in my humble opinion, represent that gap today. 4 addresses, 4 different scarcities and 1 gap. Emaar South sells the ecosystem the glut cannot copy in the southern hub. Arancia sells the land and design the towers around it cannot touch inside an open-air lifestyle thesis. Raw District, it sells you rails, leverage on the 6th urban center with a live red line. Linar sells the border discount, private sand, freehold, a Dubai-facing tenant base at the gateway to Dubai, where the city's pressure spills across the border. Now at 1590 dirhams per square foot, 1466 dirhams per square foot, 1400 dirhams per square foot and 1083 dirhams per square foot. A ladder of entry points all answering the same problem. The market has moved up. The buyer did not disappear. The door has just shifted. The first 3, they sit inside the government's Dubai blueprint. Linar sits beside the pressure line that blueprint is creating. Now, each comes with a different risk. Emaar South, the risk is timing. Arancia, the risk is execution. Raw District, the risk is absorption. And Linar, the risk is the border. You don't buy all 4. You buy the one that matches your investor profile, yeah? Now you miss this window and the next entry point may not look anything like what it looks today. Let's start with the data, because the data here is brutal. Now, Dubai Land Department in 2025 recorded around 134,623 off-plan deals in 2025, which includes apartments, townhouses, villas, with a combined worth of around 293 billion dirhams. Now strip the villas and townhouses out and 111,000 apartments, they sit at the center of it all. Further, if you sort them by price, the picture is all the more crystal clear. The 3 biggest bands alone swallowed 70% of the entire market between them. So the first band, that is the 1200 to 1500 dirham per square foot, accounted for 22,895 sales. The second band, that is the 1500 to 1800 dirham per square foot, accounted for 23,020 sales. Yeah. The third band, that is the 1800 to 2500 dirham per square foot band, recorded 32,791 sales. Now that is a market which is actually telling you where the money is moving to. Now stack everything above the 1200 dirham per square foot and you are at almost 94% of the total apartment sales happened in the categories above 1200 dirhams per square foot. And as I highlighted earlier, the under 1000 dirhams per square foot, it recorded only 1297 transactions, amounting to 1.2% of the total market. Now, what does this mean? It does not mean that the demand disappeared. It means that the supply did. So Knight Frank Destination Dubai 2025 report, it agrees from the other end. Of the 352,000 homes planned by the end of 2029, 92% are expected above 1000 dirhams per square foot. Average apartment prices in this city climbed by 69% since Q1 of 2020 to sit on 1798 dirhams per square foot. Call it weak demand if you want. Well, it isn't. The deepest yields in this city still lie in the old clusters of International City. The under 600 dirham per square foot, throwing off close to 10% yield. Appetite at the bottom, it is ferocious. However, there is nothing left to buy in this segment. The builders, they cannot catch up. Knight Frank's Q3 2025 review shows around 350,000 homes due by 2030. But by Q3, only 46% of the year's predicted completions had landed. 28,624 delivered against 61,922 expected. Dubai is not running out of buyers. It is running out of entry points. Yeah. And this is where the case for affordable living gets compelling. Dubai, as we all know, it is not growing by chance. It is growing by design. The cranes, they just follow that script. The world actually laughed at Dubai once upon a time because of their strategy, build it and they will come. But Dubai is that one city in the world which made that statement true. Read the 2040 plan and the strategy of this city is there in front of you, staring at you in your face. The city, it will run on a hierarchy of centers. Urban centers at the top, multi-sector centers, sector centers, and then the district and neighborhood centers, which are the bottom rung of the hierarchy. Now, every tier, it carries a job. The higher the center, the higher the density, the higher the share of jobs to homes, and more amenities and city-centric services will be packed inside a 20-minute walk. We are aiming to be a 20-minute city by 2040. The plan's own verdict on the old city is rather blunt. It is fragmented, disjointed, a mixed-use mess. Its remedy is exact. Walkable centers, active ground floors, green spaces, public transport, housing near jobs, and communities designed around daily life instead of buildings on empty roads. So that is the strategy of the government. Now, that is a government telling you where it will be pouring its capital, where will infrastructure go, and attention for the next 15 years will be on these very areas. So the only rule the smart capital needs in this market is to follow the plan. This is where most people make the mistake. They look at today's price. Smart investors, they look at tomorrow's infrastructure, yeah? Because that is where capital is going to go to. In Dubai, the smartest move has never been to chase the past. It has always been to stand where the plan is pointing, okay? Because Vision 2040 and D33 are our North Stars. Now, remember that man again, the man with the 80,000 check. This is the corridor his money should be funding. This is where the priced out buyers will land when affordable rung is gone, okay? And this is where the city's next decade of infrastructure is pointed. Now, if you lay it over the 2040 hierarchy map, and the corridor will start to make sense. Now, one address in this very options, on these very options that we are discussing, okay, it is being built near the airport, which will accommodate the next phase of Dubai's growth. Another one sits inside a master plan built around open air and low density living. One sits on Sheikh Zayed Road and at downtown Jebel to be exact, connected to a working red metro line station through a dedicated footbridge, not a future promise, a functioning line, okay? And a fourth one asks you a much more sharper question. What if the pressure Dubai creates for itself finds its own door? One border over on private sand at Sharjah entry price, okay? 4 developments, 4 different reasons to own this very gap. Watch how it unfolds. At this stage, I think that we are poised to explore the options in the corridor, that is the 12 to 1800 dirham per square foot corridor, where most of these buyers who are outpriced will land. Okay, so the project that I'm going to talk to you about now is Emaar South, which is scarcity hiding inside a glut of supply. Okay, so Dubai South Residential District, which is a part of the broader Dubai South Master Plan, runs around 7 square kilometers. Okay, it already carries around 6,000 finished apartments and another 35,000 are under construction, which means 41,000 units on a single plane. Now compare that to Emaar South in the same Dubai South district. You are talking about the exact same plot size, 7 square kilometers with only 15,000 apartments. Same land, 1/3 of the density in a district drowning with a supply of apartments. That restraint is your asset, okay? Its value, it's not just that it is in Dubai South. Its value is that it is a branded, master planned, low density ecosystem inside the broader Dubai South district, okay? And it is built like a city within a city, not just like a block. 48 hectares of open space. Astounding. 4 kilometers of linear parks, 25 neighborhood parks, 53,000 square meters of retail and F&B branded by Emaar, 2 K+12 schools, an 18-hole championship golf course, a clubhouse, floodlit driving range, and 2 hotels. In Dubai South Residential District, there will be a lot of buildings which will be competing on price, okay? Emaar South competes on the ecosystem. And ecosystem is what will protect value when the supply rises, okay? Now, the engine in Dubai South is Dubai South 145 square kilometer master planned city will be the Al Maktoum Airport, Expo City, Port Jebel Ali, which sits in close proximity, Jafza Free Zone. All of these are inside this demand map, which is expected to generate 35% of Dubai's GDP and create 500,000 jobs. Numbers that reflect the scale of the vision, not a single deadline, okay? This opportunity is not a one-year flip story. No, this is a long infrastructure story. The risk here is timing. Dubai South, it matures in phases, okay? But that is exactly why this entry at this point matters. You do not buy Emaar South because everything already is priced like downtown. You buy it because the city around is still being assembled, okay? The anchor here, as I said, is massive. In the words of Sheikh Mohammed, we are building the Aerotropolis of the world, which is worth 128 billion dirhams, and it will have 260 million passengers. And along with this, demand for 1 million homes will follow. In close proximity, Emirates is breaking ground on a $5.1 billion engineering complex beside it, and housing again will be required to cater for this ecosystem as well. The proof, it is already moving. Emaar South apartments rose more than 19% in a single year. And the tell on value, Ellington's nearby launch, Windsor, okay, puts a 1-bedroom at 1.2 to 1.3 million dirhams, a standalone tower. Emaar South lands close to the same money, near 1590 dirhams per square foot, with golf, with the parks, with the school, the 50,000 square meters of retail branded by Emaar, and the same check, a city inside a tower or an ecosystem which is being built by the biggest brand in real estate. So you decide what works for you, okay? Now the other opportunity that sits within the 12 to 1800 dirham per square foot corridor, which is what we are speaking about, is the plans remedy that is built to spec, okay? Now the 2040 complaint was a city that was disjointed, starved of green space, okay, hostile to a walker. Now Arancia by Beyond is the rebuttal which is set in stone. 1600 apartments across 165,000 square meter parcel, 2.3 million square foot of floor on that ground, a floor to area ratio of 1.3. That number, it does not raise towers. It keeps things low to the ground. And the land, it breathes 70% open space. Hold that against the field, okay? Al Barari, Dubai's gold standard for green communities, runs at 65% open space. Gulf Woods, launched at the very same price point 2 years back, is 50% open space. Aldar's Wilds, 40%, okay, open space, and that one, it asks 1.6 million dirhams for a one bed. Arancia that way outgreens Al Barari, and it stands 1/3 less than the Wilds in the same Dubailand ecosystem. Now, what is astounding here is how every car goes underground. The surface, it is handed to trees, water, and amenities. A 1 kilometer long spine threads through the clusters. Coffee and food are within 350 meters walk. Retail is pushed smartly to the road so that the businesses breathe. Water throughout. Why? Because water quiets the mind, okay? So we're talking about low rise, low density, the new language of luxury, while everyone else stacks 1,500 units into a single tower right across Arancia. And the name on the drawing tells you who this is really for. Day one, the top 3 contracting company in the region, the hands behind Address Dubai Mall and Port de la Mer. HBA on the interiors, the largest hospitality design house on earth. Cooper Hills on the landscape. That is the ultra luxury playbook, okay, which is run at 1.1 million entry, okay. The roads here, they are already coming. The Sheikh Latifah bint Hamdan corridor, 12 kilometer of a new carriageway, shaving 20% of the travel time to downtown and connecting you to DIFC before you will collect your keys. And the Gold Line, by the way, it is following as it is coming to Global Village. So with all of this infrastructure upgrade happening, you buy here at 1400 dirhams per square foot, okay? But let me show you what this actually means, because this number has a proof. It is not just a projection. Right now, the same Wadi Al Safa 3 sub-communities, okay? I have a development by Meraki called The Heaven, where a one bedroom, which is around 740 to 762 square foot, is renting at 72,500 up to 83,000 a year. Today, 2026, a standalone tower, no ecosystem, no HBA, no 70% open space, no design story, just a box on a plot, yeah? Apply the market's own logic to Arancia, okay? Take around 80,000 dirhams, the middle of that Meraki range, the conservative number, with zero growth assumed between now and 2029 at a 5% market yield, okay, which is what a stabilized quality Dubai community trades at. 80,000 dirhams of annual rent prices, the asset at 1.6 million dirhams, okay. Now this is your floor, it is not a hope. The yield derived valuation anchored in today's competition setup, okay. Now the cash, entry near 1.1 million dirhams, okay. 40-60 payment plan where you pay 40% during construction, 60% at handover. The cash you actually commit before you get your keys in your hand is 440,000 dirhams. Profit at 1.6 million dirhams is 500,000 dirhams. Return on that 440,000 is 113.6%. And that's using today's rent. No growth, no Gold Line, no Sheikh Latifah uplift, yeah? No appreciation in Dubailand corridor. 1.6 million dirhams is your floor, and it is built on a standalone tower building which is next door. Yeah. So you decide where you want your money to be going to. You want to invest in a standalone tower, or you want to invest in a sector center where exactly Arancia is located. And the Vision 2040 structural summary, it highlights this. Arancia is a part of a sector center, the third highest center in the hierarchy of centers. So you have beyond there doing a master plan community where you have the chance to enter in the first phase. And I'm sure you all know where this leads us to. Now, coming back to the other investment opportunity, which is within that 12 to 1800 dirham per square foot corridor, which we were speaking about earlier. Okay. Now, this happens to be by a developer whose mantra claims that they are in the pursuit of perfection. Okay. And this is the only opportunity that is actually standing on the rails. By rails, I mean an active metro station. This is downtown Jebel Ali, the 6th urban center, the one the plan holds for the next wave of development. So 4 towers on Sheikh Zayed Road, fully furnished residences with co-working spaces, lifestyle amenities, alongside retail and commercial energy, and direct connectivity to the Dubai Red Metro line through a dedicated footbridge. Yeah. Now, this is not a promised line, as I said earlier, it is a running one. And this really matters because the premium is measured. Yeah. CBRE, it tracked 13 years of Dubai Metro impact, and the lesson was sharper than buying beside a metro station. Yeah. Okay. So proximity only pays when it is paired with amenities, walkability, and a mixed use environment. A bare tower beside a metro station is still a bare tower. Raw district is furnished, mixed use, amenity stacked on the bridge, a different animal totally compared to a standalone tower. Okay. Now the objection writes itself. You will say it's too far, probably it's too raw, it's too early, and honestly, that objection is not wrong. The risk here is absorption. Downtown Jebel Ali needs the wider story to mature. It needs people, offices, and daily demand for the Jebel Ali engine to compound. Okay. And furnished apartments with commercial activity on Sheikh Zayed Road with direct metro access are not only competing for end users, they are competing for tenants. Okay. And that is your story here. Yeah. In the case of Raw District, again, the floor is the proof. Ready furnished one beds in downtown Jebel Ali are already clearing the 80,000 dirham rent in today's market. Okay. Which is without the metro bridge, without the mixed use specification, and without the amenity stack that Raw boasts. Okay. That is what the market is already paying for a lesser product in the same very postcode. Okay. Now let's look at the payment plan. Okay. And that will actually become the full story. A 60-40 payment plan, 60% by handover, 40% deferred across 3 years until 2032. The home is furnished, so it earns rent from day one. It provides you with turnkey convenience. Okay. Now for a moment, let's slow the maths down. On a 1 million dirham home, 600,000 dirhams by handover, 400,000 dirhams deferred. Okay. Which means roughly around 142,667 dirhams per year. At 885,000 dirhams rental, which offsets around 60% of the annual deferred slides. This is not magic, it is structure. The payment plan here gives you time, the furniture gives you rental readiness, the metro gives you the tenant logic, and the mixed use gives you the reason to compete with those around you. Okay. Rails plus rent, it is the runway. At 85,000 rental, gross yield sits around 8.5% on the purchase price. Yeah. This is not net, not guaranteed. We are talking about gross figures. Okay. A tenant here will carry a part of your load while you will hold the asset. Okay. So that is the case of the Raw District. which again features as an urban center in the structural summary of Vision 2040. And this area, by the way, I do not need to say much about this because I've covered it in a lot of other videos. You're talking about economic powerhouses of Dubai. You're in close proximity to Jafza and Port Jebel Ali, which together account for 713 billion dirhams of the total non-oil foreign trade. Yeah, they together create around a million jobs, which is 27% of all the jobs. And then you're also in close proximity to Al Maktoum Airport, which is taking shape. And even in its construction, it is contributing around 6 billion dirhams to Dubai's GDP and will create around 150,000 jobs during construction. So this is the story here. Now you decide whether RAW makes the cut for you or not. And we, in the meantime, are going to explore, this corridor again, and the corridor which is 1200 to 1800 dirhams per square foot. So let's see what is the other opportunity that awaits us. Now, as we tread along this 12 to 1800 dirhams per square foot corridor where most of the buyers who are outpriced will land, we have reached a point where Dubai just sawed the rung off and the new one is being rebuilt one border over. I'm going to start with my Iranian client. He owns a villa in District 1 in Phase 3, which is empty. He owns an apartment, a 3-bedroom lagoon view apartment, again in District 1, also empty, yeah? And he lives by choice in a rented flat in Al Nahada, right on the Dubai-Sharjah border, okay? So 2 prime homes he does not live in, 1 border flat that he does live in, okay? Now, that isn't about money. That is about the pull of the place and convenience, yeah, which is there around this place, okay? So the Dubai floor of 1200 dirhams per square foot, as we saw, 2025 cleared almost nothing beneath it. Linar's average 1 bedroom at 849,000 dirhams, reclaimed beachfront, Sharjah freehold, under that floor for what a box of an apartment inland in Dubai costs. Given what reclamation costs to pour sand into the sea, leaving this one off the map isn't an oversight. It is a broad daylight robbery for the buyer. Now the address, Al Mamzar, it sits 20 minutes from Dubai's financial core, traffic permitting, with direct Sheikh Zayed Road access, one way, and Sharjah's industrial engine on the other side. A blue flag beach backed by a 500 million government spend and Sindhaga Corridor's 5.3 billion road expansion, rewiring the heritage hub right beside Al Mamzar, okay? So think about it, just across that border is the Emirates' densest population in the heritage hub. We're talking about areas like Bar Dubai, Karama, Satwa, Riga, roughly 1.4 million people, over a third of this city. And almost everything here is leasehold. Freehold is a rounding error, by the way. So you have a vast audience, there is money, there is demand, and there is no door. Linar is that door, one border over, and it is freehold. The ecosystem is where nothing else comes close to it, okay? Name the neighbor with a 325-meter private beach. There isn't one, okay? Dubai side towers offer public park access. Mariam Island, a shared promenade with Al Jadda, which is landlocked. Linar is a 6-tower resort on its own sand with fountains, podium gardens, a clubhouse, retail, and a beachfront plaza, okay? Now, unlike the other 3 options where we were buying because the city around them was being still built, Linar city already exists. So you have schools, colleges, malls, hospitals already open and running, okay? And most of the footprint of concrete that is here already predates Linar, okay? So Alef is giving you the same plugged-in life on a private sand at an affordable number with nothing left to wait for. Now the floor proof here. Older 1-bedrooms on the Dubai side of Al Mamzar with no private beach, which are dated, already ask around 65,000 dirhams. Linar's 1-bedroom, which span around 1,000 square foot, okay, yeah, on private sand inside a resort, a bigger, better product than that of the competition. Now take the conservative case anyway, okay? Assume this private sand with resort ecosystem, new build, freehold, unprecedented in this entire area with a commercial tower as well, rents just at 60,000 in 2029. Compressed straight to a net 5% yield. Even though the Sharjah waterfront, it runs a higher yield at 60,000 dirhams and 5%, the asset values at 1.2 million against an 849,000 entry. You start with the room here. Now the cash. With an average entry of around 849,000 dirhams on a 30-70 payment plan, 30% across construction and 70% on handover. The capital you commit until you get the keys in your hand is around 254,700 dirhams, which means an upside of 1.2 million dirhams, and 351,000 is your profit, 137.8% cash on cash model. High because only 30% is committed pre-handover, while the asset re-rates from Sharjah entry price to a waterfront valuation. Now, this is not a guaranteed thing. It is modeled with the rent cut down, the yield compressed, and the upside which is still alive. Now let's talk about the risk. It isn't timing or execution in this case. It is the border. A Sharjah freehold deal, not DLD title, okay? And a buyer who has to be comfortable owning across the line. That discomfort is exactly why the price still starts, with an 8. The day that gap between Dubai and Sharjah beachfront narrows, the discount closes, and so will this entry. And guess what? You're buying at 1,083 dirhams per square foot. Now, I gave you my Iranian client's example who has best of both the worlds, but he continues to choose to live over the border. Now, so far, we have seen 4 addresses. Safest brand, longest infrastructure runway is Emaar South. Strongest design to entry price mismatch, you have Arancia. Rental readiness, metro connectivity, and payment leverage, Raw District. Private beachfront, freehold ownership, and the border discount, you have Linar by Alef. The same gap, different plays, same thesis, but different risks. Smart capital does not guess here. You know what it does? It reads the plan, it reads the pressure, and it follows the value. So while that door is still open, okay, what I want you to do is think about the man with the 80,000 dirham check. He signs it tonight. He will sign it again next year. Each time he does, the rung moves a little higher. Each time he waits, the 440,000 dirham he needs feels a little bit more difficult to find. The ladder isn't broken, it is moving, and it is moving away from the man with the 80,000 dirham check. The 4 addresses, they don't ask him to catch a falling market. They ask him to stand in the path of the demand, inside Dubai's plan, or right where the pressure crosses the border. Not a bet on the market. A thesis built on price bands, infrastructure, land use, payment plans, rental logic, and the direction of the city. That is what financial nihilism misses. The door isn't closed. It is not going to stay open forever, although Dubai does not grow by chance. It grows by design. And when the design prices people out, the pressure always finds the next door. Don't bet against the plan. Stand on it. Now, if you need the price lists, the floor plans, the payment plan calculators on all 4 of these projects that we spoke about, please comment the word gap and I will send it across to you. And finally, if this video added to your knowledge and if it motivated you to walk into that door whilst it's still open, then please do like this video, subscribe to our channel, and leave your precious comments, okay? Because it goes a long way to expand our reach And this is Tarun saying sayonara until we meet again.